because as Jack Bogle would say, don't look for the needle, buy the whole haystack. Hey, what's going on everybody? Welcome back to the channel. I'm Waller's Wallet, and if you're someone who's been thinking about investing, it can seem daunting and that it's overly complicated because you don't want to pick the wrong stocks, right? But don't worry, because you can build a simple 3-fund portfolio that will offer you plenty of growth. Now, if you're someone who likes topics like this, consider giving this video a thumbs up. Also, don't forget to subscribe to the channel and turn that bell notification on as well so you don't miss out on future videos. Now, if you're someone who might be new to investing, or maybe you just want a simple, more hands-off approach to your investing portfolio, a 3-fund portfolio might be what you want or even be what you need, because this helps diversify your investments and it doesn't make it overly complicated, which is always nice, right? And with a simple portfolio, there's going to be less you need to do when it comes to rebalancing or making changes to your investments. And if you're looking for a simple investment portfolio, then the Boglehead or the lazy portfolio just might be the right option for you. Now, the principles of a 3-fund portfolio is that you want it to be a diverse portfolio that has low costs, meaning low expense ratios. And you want it to have simple allocations and lower risk by using index funds or ETFs. So you're not picking individual stocks because those can be more volatile. Instead, you're buying the whole market because as Jack Bogle would say, don't look for the needle, buy the whole haystack. And an index fund or ETF is that haystack. You also want it to be easy to adjust and to monitor. So if you're deciding to build a 3-fund portfolio, keeping it simple is going to be important. And diversifying your portfolio gives you stability and it really reduces putting all your eggs in one basket. And index funds and ETFs have great diversity and there are tons of low-cost options available for you. And index funds and ETFs are pretty simple compared to picking individual stocks because their performance pretty much matches the market. While individual stocks may not match the market, they could potentially underperform or maybe even they could overperform. But with so many options available to you on the market, what does a 3-fund investment portfolio look like? Now, a typical 3-fund investment portfolio breakdown consists of a US total stock market index fund, a total international stock market index fund, and a total bond market index fund. That's it. Those are the only types of funds that you would need. Then you need to decide your risk tolerance. Now, this is really going to be individualized. You might be happy having more risk because it means more opportunity to make more money, or maybe you want to be more conservative. But let's say you're someone who's younger, in your mid-20s or maybe early 30s, then you have a lot of time left in the market, so you might be willing to take more risk, which means you're going to put more money into stocks and less money into bonds. But if, for example, you're someone who's maybe 55, you're probably getting ready for retirement if you're not already retired. So being more conservative might be more appropriate, which means having a higher percentage in bonds compared to stocks. But again, it comes down to your preference and your risk tolerance because there's really not a one-size-fits-all model for risk tolerance. But once you figure out your risk tolerance, then you can decide the breakdown of your 3-fund portfolio. So younger investors might have a higher risk tolerance and may consider 80% stocks or a 20% bond mix or something along those lines. Then as they get older, they can choose to decrease their stock holdings and increase their bond holdings, going to maybe 50% in bonds as they get closer to retirement or when they hit retirement age. And there are a bunch of different calculators online to help you decide how you should split your portfolio if you're unsure how you want to allocate your funds in your portfolio. Then when you're deciding which funds to select, there are plenty of options available out on the market. And when you look to funds from Vanguard, Schwab, or Fidelity, for example, some of these funds are very close in how they perform, their holdings, and even their expense ratio costs. So be sure to do your research, but since there are many similar funds available to you, spending a few extra hours trying to decide if 0.1% difference over the last 10 years, that might not be worth losing any sleep over. But let's say you just graduated from college and you wanted to start investing, so you decided to build a 3-fund portfolio. An example of your portfolio may look just like this. For a US stock market total index, you could choose between VTI or SCHB. Both of these have an extremely low expense ratio of only 0.03%, and this could make up 60 or even 70% of your total portfolio. Then for an international fund, you could use options like Vanguard's VXUS, iShares IXUS, or even Schwab's SCHF. And the expense ratio for VXUS is 0.08%. The expense ratio for IXUS is 0.09%, and for SCHF, the expense ratio is 0.06%. All of these are still very reasonable for cost, and this could make up 15 or even 20% of your portfolio, leaving about 10 to 15% for bonds. And options for bond investments, you could choose BND from Vanguard or SCHZ from Schwab. And BND has an expense ratio of 0.035% and SCHZ has an expense ratio of 0.04%. Again, both very reasonable and low cost. And in total, you have yourself a cost-effective portfolio that is well diversified. And as you get older, or maybe your risk tolerance changes for whatever reason, you can shift how you contribute to these funds to adjust your total allocations. Now, there are plenty of other funds that you can select. I only chose these select few for this example, but feel free to use any fund that you want to build out your portfolio. Now, there are other investment options besides a 3-fund portfolio. So while you can make a 3-fund portfolio, you can go as low as 1 fund or you can add more than 3. It really just depends on how you want to invest. And some people are just happy throwing money into VT stacks and that's it, while others want a multi-fund setup with individual stocks as well. So there are many different ways you can choose to invest your money, but it doesn't have to be that complicated. Or if you don't want to worry about doing the work yourself, you could choose to use robo-investing from like Wealthfront, Betterment, or even M1. And this takes some of the work off of you while you still get the benefits of investing, which could be exactly what you need or you want, even if you're a more advanced investor. Now, having a good investment strategy and plan is important to letting your money work for you and help your money grow over time. But not everyone wants to deal with super complex portfolios or dedicate hours and hours to monitor and rebalance those portfolios. And even while this is a simple strategy, you do need to check on it and rebalance it accordingly to make sure one allocation isn't going above or below your allocation goals, so there is some monitoring required. And while investing can be super complicated, you don't need to make it that complicated. And index funds are a great and simple way to invest and build your wealth and have been shown to be a great investment option for people. So a 3-fund portfolio is just one investment option of many different types. But for someone looking for a well-diversified portfolio that grows with the market, has reasonably low cost, and isn't overly time-consuming, a 3-fund portfolio might just be perfect for you. So tell me, have you considered building a 3-fund portfolio? Hey everyone, thanks for tuning in this video. If you want to help support the channel, take a look at the links down in the description below. And if you know somebody that could benefit from this video, feel free to share with them. And until next time, safe travel and take care.